Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8:49 a.m. Eastern Time on Monday, September 21st, 2020. So I just want to look at the year-to-date chart real quick here. So as we put in uh, an all-time high before COVID, we had our COVID drop. We come back up, right? Obviously, it doesn't take much of a rocket scientist to know that the market is worth less in August, September, and September of 2020 than it was in January and February of 20 based on just pure evaluations, right? So we come back up, we traded down, we come back all the way up to the top. Clearly, from where this point was before, we've had what could be considered as a blow off top. I thought we'd get much more of a blow off top, but what you have to consider now in this pattern is that this is potentially it for a generation. When I say generation, that this high won't be taken out for over 10 years. So we'll find out here in the near future. Price action will tell us, the market will tell us, but you have to consider at this point in time now, this is a distinct possibility. So we're gapping down again today, down to 32.50, 250. Where is that really at? That is the top of this COVID first drop down, right? This is a major drop down here, and that ends up lining up right around 32.57. You can get in the exact number on your charts. It also comes into this high from basically September 21st, 22nd, and 24th here, and 23rd, sorry, right in this time frame is where we're going to be, landing. So as you can see, as long as we can stay, really where I've got these lines dotted on it, this 31.92 half to 32.30, as long as we bottom somewhere in this general area and potentially even go down to 31.40, and I know Jack is watching 31.11, I believe is his level for retracement, which would line up to this bottom of this node. But the problem is that the farther you get underneath of this 32 or 31.92, you start getting overhead supply, right? All these days of traders, right, that have got in the market that haven't been playing in the market for years, right? We got new players in the market, which is, an ingredient needed to put in a generational top. You need that last bit of money to come into the market, that last bit of excitement, chasing, returns that are really overvalued, right? So as we come back in here, the market's going to let us know whether we can, get back above where this overhead supply is and get through here. But even if we bottom from here now, probably even before the election, we're going to have a very difficult time at this point getting over 33.80. So at this point, I would expect any bottom now to have a difficult time getting over 31.80 or 33.80 all the way up to, let's just say, 3400. So that's about 200 points or another 100 points, I'm sorry, under this area, which doesn't seem like a lot, but right, that's what happens when you put it at the top. You never get back up. These people will never get paid again. So obviously the farther we fall down, the worse it gets for overhead supply. The next major level down is going to be just under 3,000 at basically 2,900 is where we're going to have substantial overhead supply coming in, and then we could start retesting these lows. So basically I've got this broke down into sections, right? A section that's basically from where we are right now to 31.92 half, another section that goes from there down to 29.40, and then another section that goes down to 21.92 half, basically. And you can see these are these blue lines are the untested nodes, right? So we're likely to, if we start trading under this area of the chart, basically back under 3,000, under 2,900, it's going to be extremely difficult to get price action back up over 3,000 basically once we trade under 2,900. So we want to see the market, if you're bullish, right, which is better for everyone living basically in the United States, if we can hold the bull market a little bit longer, regardless of who's responsible for it, the Fed, fear of chasing out, whatever. We start going back down, that's going to also correlate to a recession coming in the next short time, and that could be with the election coming up, regime changes, whatnot. Keep in mind that Democratic parties do generally fare better in the future than Republican parties as far as the stock market. But there has been cyclical. This bull market has been running now since March of 2009. It is long in the tooth. So with that said, let's get into the charts. I'm going to get out. I'm going to make this real quick. We're only going to look at the ES today. So one thing I want to point out, and one thing that you can start watching for on your own technical analysis, is all these lines that I have on here marked should have been where they're support resistance lines, right? So what's happened is we've fallen under them, they become resistance. We've fallen under it, it's become resistance. We've fallen under it, it's become resistance. Very short-lived has it been support, right? Under it, resistance. Under it, resistance. Under it, resistance, right? So these are not support resistance lines anymore. These are just resistance lines, basically. So until we start seeing the script flip to where these are support, where support resistance lines turn into support, right? This is just nothing but the bears, and you're just looking for the next place to sell. And, eventually you'll see that pattern flip. But until it flips, and it could flip this week, by the way. So we're watching this area that I've been pointing out, right? Because things are going to get a lot more difficult for the market if we don't start flipping the script here and get back up another 100 to 200 points here within the next 2 to 3 weeks. If we go down another 300 points, the market is in deep doo-doo as far as I'm concerned. I'm actually going to leave it here and just watch this price pattern, and don't, whether you're, we've got a 65 point range or something over, actually a 79 point range in the session so far overnight. Don't get complacent with not having stops on the server today, whether you're playing to the long side or the short side. And I think that still the best argument until proven otherwise. I'll print the overnight value areas. We're going to print the that. I'll make some comments in the equity profiles as well this morning while trading is going on. But I think after the first two sessions clear from this week, we'll have a better picture of what's going on longer term. So when Wednesday's session opens up Tuesday night at 6 p.m., we should have a nice clear picture of if we've been able to base down here and start moving higher and flip the script, or whether it's just basically done for now. You guys have a great day, and I'll talk to you